Where do you think you'll be in 10 years? That could be profession-wise. Maybe you're doing undergrad now and you're going to go on to a master's program or a professional degree. Maybe it's buying a home. So really where we kind of see ourselves going and how we're going to get there affects, a lot. And that includes our personal finances. So chances are our vision and where we want to go includes some degree of financial security. We saw that pretty well across all of those responses. It could be vacations to exotic locations. I've got Europe, not so exotic, but it could be more exotic than that. Or even just a nice car. And you think about, the cost of automobiles these days and even the cost of automobile insurance. All of those things have gotten quite pricey, and good trying to find a new car to buy right now with still lots of shortages in that and prices going way up compared to you used to be able to negotiate it down some, and now dealerships are wanting you actually pay more than their asking price. So at the very least, you want to be able to live comfortably, be able to go out to dinner, maybe go to a concert without having to worry about, well, I don't really have money, but I want to do it, so let me put it on a credit card. We want to, make sure we've got some wiggle room in our budgets to be able to, enjoy things. So everything doing comes with some type of opportunity cost, and our finances are no different. So for example, you all chose to be on this presentation this morning. Let's see, what time is it? It is 11:09. Some people could still be sleeping. You could be taking a good nap or having a long rest from last night instead of being on this presentation. And our finances are no different. Every time we spend money, that's money that's gone that we can't use to buy something else with, that we can't use to save. So every spending decision has an opportunity cost. So if I decide that I want to go to McDonald's and have lunch today, the average price probably of one of their meals, I know they went up. I took my kids through the drive-through the other day and I was going, oh, so much for a value meal anymore. It's about $8, $9 by the time you get the drink and all of that. And if you want the large drink and the upcharge, if we just say it's an even $10, that's $10 that I don't have to save or $10 to spend later because I used it for my lunch. You look at the cost of going to Starbucks, easily at least $5 spent there about every time we go. And for most folks, it's not like a huge dollar item that gets them financially in trouble. It's a lot of these little costs that add up over a month that we don't often think about. We don't really blink an eye when we're pulling out that debit card or the cash or the credit card to pay for the Starbucks or the lunch or whatever. So those amounts really, really do add up. So one of the things that you can do as you're, a college student, to help you get on track now and to think about, continuing this practice, this is something that I still do, is tracking. So I track my income and I track my expenses, and I try to project this out as well. So you want to figure out how much money is coming in, whether that's on a month basis or maybe it's a semester basis. Maybe you get a financial aid package and scholarship money that's left over after everything's paid out and financial aid deposited into your account at the beginning of the semester, and you've got that money to live off of. Or maybe you are employed, whether that's part-time or full-time, and you've got a paycheck coming in weekly or bi-weekly or monthly. Possibly your parents are giving you some type of living stipend or allowance. It's all income that's coming in, basically. So we want to add up everything that's coming in, regardless of where it's coming from. And we want to be as exact as we can. And if we do have to make an estimate, we want to do it very conservatively, because you think about income, you don't want to overestimate it and be like, oh, well, I thought I was going to work 40 hours this week, but really it's only 20. And now I don't have the money to pay my rent because I was estimating I had a lot more coming in. So you want to be very conservative in the income estimate. And then you want to track your spending. And, you've got some spending that's going to be more of what you consider kind of a fixed expense. So, for example, when you sign a lease, how much your rent is going to be every month for that lease period. You know what utilities are included in that rent. So, if you have to add on more for, say, internet service, or if you're having to pay your electricity separately. Then you've also got discretionary spending, and that's where we generally have the most control over at any given point in time. So we want to make sure, excuse me. So when we think about that discretionary, think about the food, for example. You go to the grocery store and you buy groceries. Don't ever go to the grocery store hungry. That will get you in trouble every time. And if you have children, don't take them to the grocery store unless you're truly wanting to help them plan and help get them involved in the shopping, which is a great teaching moment, but they will want everything from personal experience. So go to the grocery store when you're full, have a list made out of what you need, and be careful with those wants. And really do that comparison shopping. So do we really need to have the brand name of this, or is the generic one just fine? For some things, I'm totally good with the generic. There's a few things I'm like, the brand name actually does taste a little different and a little better to me. And then, pay attention to what's on sale. If it's a buy one, get one free, make sure you're getting that free item. And then thinking about how much we eat out, tracking that amount, that can really add up very quickly as well. I know for my family, we ordered on Sunday. We have, I actually live in Ocala, but we ordered from Cheddar's and did one of their family bundles. And by the time it was said and done and I gave a tip, that was close to $50 to basically feed what equates to kind of a family of 3 eating, because my 5-year-old won't eat that food. Now, we did have some extra food left over that we used in lunches, and I think we made another dinner out of it. But, if you think about spending just $50 every weekend eating out on something, that's $200 a month. And then we also want to pay attention to what I've got categorized here as our bills. So, auto insurance, for example, many of you may have saw your auto insurance increase recently within probably the last 6 months or so. I can tell you my insurance personally increased, and we have not had any accidents or anything. So when I saw it jump, I called the office and I was like, what's going on with this? Is there anything I can do to try to get this lower? So, thinking about looking at that, and I would say, if you want to compare different insurances, make sure you're comparing apples and apples, because you could have one policy, but it gets really lower because you only got the state minimum coverage. That's not really the policy you want. It doesn't pay very much. And if you hit somebody and it's your fault and it does a lot of damage to their newer vehicle, you may end up owing money personally if you just have that minimum coverage. So tracking where everything's going, comparing the cost of this as you're seeing what you're paying out, looking to see, you think about all the different services we sign up for with subscriptions. Amazon Prime, Netflix, Hulu, all of those. Do we really need to keep all of those? Are we actually even using them? So, paying attention to where our money's going can give us some opportunities to investigate if we really want to continue this stuff or not, or if we're really just paying out, $15 and $20 here and there, but we're actually not even using it. And you definitely want to make sure that you're paying all of these bills on time, because it could be somebody who reports to the credit reporting agency, and we'll talk about what that does if you don't pay it on time. And then looking at transportation costs, the cost of gas, that adds up to quite a bit of money. If you park on campus, for example, you're not going to be parking there for free. Even as a faculty member, I have to pay for my parking pass. And then thinking, school related expenses, books are not cheap. So is it a book that maybe we can rent versus getting a hard copy of it? Is it something that we do need to keep? And sometimes they are basic books that provide foundational information that you may wish you had in the future. Computers. You can't do much of anything, in college without having a computer, whether that's access to one or your own personal one. And then thinking about entertainment and personal expenses. We're going to school, we're working, all of that. So we want to do some fun stuff too. So thinking how, maybe we can look at discounted tickets for movies or kind of go in an off time versus prime time for a movie. I don't know. I personally wait till stuff is often released on Netflix, and because you think about the movies and the ticket is a lot. You can't go there without getting the popcorn, right? Because it smells so good. That popcorn's very expensive. I took my 7-year-old to her first movie over the summer, and I think it turned into about a $40 extravaganza. And that was 2 tickets kind of in the middle of the day, popcorn, a soft drink for both of us. And I think she got some gummy bears or something like that, but it all adds up really quickly. And then thinking about, how much you're spending on cosmetics, on toiletries, if we're getting our hair done, if we get nails done, stuff like that. I'm by means all for getting massages and taking care of yourself, but we need to make sure that we're budgeting it and we've got the funds to pay for it. It's not stuff we want to put on a credit card for say, because then that can cost us an interest and stuff as well. So track your income, track your expenses. If you have never done that, sit down and do that. Start with those expenses and track it for a week, 2 weeks, 3 weeks, 4 weeks to give yourself an idea, and just figure out some system that works for you. It could literally be just jotting it down on a piece of paper. Or maybe you have a particular card that you use all of the time and you're like, okay, I can look at that. But figure out something. It doesn't have to be a complicated system by any means, but just consistently tracking it to get an idea of where you're spending. I can tell you, I had a student that I worked with a number of years ago, and she was tracking it for part of a class project, and she did not realize how much she was spending on coffee. And she actually went out and bought her a coffee maker after that to fix the coffee at home and to bring with her. And it was about 7 years later, I saw this same student as I was going into church on a Sunday. She was one of the door greeter people who open the door and say, good morning. She was like, I know you. And I'm going, okay, this could go lots of ways because, also foster parent here could go a bunch of ways. She's like, I had you in class for personal finance. I'm like, oh, that's great. She said, and she gave me the story again that with the coffee and all of that. She said, I am still using that coffee maker. And this was like 5-7 years later after she'd bought it. So it had saved her a lot of money over that period of time. And I can personally tell you, if you see me on campus, I bring my coffee every day. I've got a coffee maker in my office, all of that. So from there, you want to look at creating a budget. So we know what we're spending. We know what we've got coming in. So then we want to look at creating a budget. This could be a weekly budget or a monthly budget. And our budget isn't any good if we just ignore it. So we want to continue to track so then we can compare it to our budget to see if we overspent, or maybe we were lucky and we underspent and we've actually got some money we can move into savings. So when we track and then we compare that to a budget, it can tell us if we need to increase our income or decrease our expenses. So we could increase our income by maybe taking on a part-time job, cooking at home, the coffee from home. Great ways if you find out you're eating out too much and you're like, oh my goodness, I did not realize I was spending $600 a month on eating out. And that is real easy to do if you eat out consistently most days. So you also want to think about establish an emergency fund. Does anybody have a pet? Got a cat, a dog, a guinea pig, an iguana? Anybody? I'm seeing Nolan raising his hand. He's got something. Put in the chat if you've got a pet. I have a pug. His name is Oliver. He is 14 years old. So Oliver is, he can't see very good now and he doesn't hear very good, but he still gets around and he still enjoys his treats. I'm seeing several people, dogs, cats, got a poodle. Yeah, so anytime we go out of town, we have to have Oliver boarded. So when you start looking at boarding a pet, oh, somebody got a turtle. I used to have a turtle when I was young. I don't know, probably like 7 or 8 years old. I had a little small turtle as a pet. So thinking about expenses, boarding is one expense if you don't have somebody to care for the pet when you're gone and you can't take them with them. You know, you're looking at probably $20 on up a night. When you go and you do just their routine vaccinations and the physical, depending on the exact shots that they need, you know, you're probably looking at easily $100 on up to 200, and depending on where you go. And then what happens when they get sick? Or they're involved in an accident? Anybody ever have a pet eat a sock? Yeah, true story that costed hundreds of dollars. So, you know, they get sick, we take them to the vet, right? If we don't have that money saved up, what are we going to do generally? Going to have to put it on a credit card because they need to be seen and they need their medicine and they need whatever x-ray it is and sometimes a surgery, all of that. It's some really hard decisions to make, and that's where an emergency fund could come in. If you have a vehicle, you are at some point in time going to have a flat tire. You are some point in time going to need to have your car battery replaced. So you think about, again, emergency fund. I can assure you a flat tire is not something I plan in my day, but it has happened a number of times. And most recently, it happened on a fairly new vehicle, and it cost a couple $100 to get a new tire. One new tire. So emergencies are going to happen. And most emergencies are going to cost some type of money, whether that's flying home to visit a sick grandparent. You know, things are going to happen. So we want to try to save for emergencies. And that could start out, you know, with a very, very small amount. Even saving just $20 a month would be a start. You save $20 a month. At the end of the year, you've got almost $250 saved. And we also want to get into creating that habit of savings. So any of you that do have employment, I would encourage you to look at your direct deposit, which is what most employers are using. Instead of you getting an actual paper paycheck, most of you probably have never ever experienced that. That money goes automatically into your bank account. Well, you can have it go into multiple accounts. So you could have some that goes into your checking account, and then you could automatically put, say, 20, 30, 40, 50, or whatever into your savings account. So that's one way to kind of create that habit of savings, just like a retirement account. You know, I don't get paid at UF and then I write a check back to my retirement account or transfer money electronically to it. I set it up when I was first employed at UF back in 2011, and that money automatically transfers. So I don't even have to do anything. In fact, I would have to do something if I wanted it to stop. So once you make something automated, it's generally going to keep going until you do something to change it. So anything we can automate from a savings perspective gets us into that habit. And then it does give us that financial safety net if something comes up. And like I said, those small amounts really do add up. So when you're deciding if I'm going to spend $5 on this coffee or whatever it is from Starbucks, that could be $5 that we're saving. And I'm not saying not to have any fun and to enjoy life and all of that at all, but we need to think about the savings and make sure that we do have some going in there. Even as a college student, we need to get into that habit and still, you know, enjoy life. So we want to make sure we are setting goals. So you probably have a goal of graduating in a certain number of years from the University of Florida. You don't want to be pursuing your undergraduate, say, 8 years from now, right? Hopefully 4 years, 5 years, you're graduating with that degree. And then maybe you have a goal that you want to go on into a master's program. So goals are just the same with financial goals. You know, you think about tracking the income and expenses, setting up a budget. Well, we want to have financial goals as well. So we want to look at having what's called SMART goals. So we want it to be specific, measurable, attainable, realistic, and timely. So you could set up a financial goal as saving for an emergency fund. which I've got here as an example. So it's specific. We're going to save $500 for an emergency fund. And it's measurable because when you've saved $50, you know that you've got 10% of that goal met. And then you want to make sure you've got the money to be able to save for it. So is it attainable? Do you have a job to be able to save for this money, or where are you getting this money from? And we want to make sure that we're picking something that's realistic to you as a college student. So it's all about relevance to your situation, but an emergency fund is pretty relevant to about everybody. And then thinking, timely. So how long will it take? So an example. So in 9 months, I want to have $500 saved in case of emergencies. So it's measurable. We have a specific dollar amount to count up to. We've got a way to track our progress, make sure we're on track of reaching it, because we can look and see how much we're saving every week or every month. Now, let's see if it's achievable. So 39 weeks would equate to about 9 months. And if we took that 500 and divided it by 39 weeks, we would need to save almost $13 a week. So we would have to decide if saving $13, $12.82, if that would be achievable on our college budget. Is there some place we could cut back in our expenses where we could save that $13 every week? Very much realistic, because everyone needs an emergency fund. Because like I said, it's just a matter of time before something happens. I do not wish a flat tire on anyone, but the fact is it is gonna happen at some point in time, and probably the worst time. It's probably when you're trying to hurry to get somewhere. But really being able to cover those unexpected expenses can make a huge difference, and oftentimes being able to afford another semester of tuition. Yeah, I've seen students where they've had to sit out a semester because of unexpected expenses. It's also time-based, so the time frame of 9 months, and you'd have to decide if that's comfortable for you, and if it's not, then maybe you need to extend it over 12 months. If it seems like 9 months, yeah, really, I think I could do it faster than that. Maybe I want to cut it down to 6 months and you save about $20 a week instead. And that would get you the 500 in about 6 months. So again, it's finding whatever makes sense for your situation, what would work for you. But at the end of the day, everybody really does need an emergency fund. So I want to also talk about credit. Probably many of you all have credit cards. If you haven't used credit, you will use it at some point. Most of us will need a mortgage loan to be able to purchase a home. Many of us will need a car loan to be able to purchase a car. And like I said, many of us have credit cards that we often use daily. So when we are taking out a line of credit, we're trading future consumption for consumption today. So we're trading future consumption for consumption today, because I've got to pay that credit back. So if you look at a home loan, for example, many mortgages are 30-year loans. You'll often see 20-year loans and 15-year loans as well. But a lot of people will put it on a 30-year mortgage because that, in essence, decreases the amount you're paying monthly. So it makes your monthly payment lower, but it means you're paying for a lot longer, which also means you're going to be paying way more in interest. And typically a 30-year mortgage interest rate is going to be higher than, say, a 20-year or a 15-year. So we're going to say, hey, we're going to make this $1,200, $1,500, $2,000 payment every month for the next 360 months or 30 years. So we sign that loan today. Again, for 360 months, that $2,000 is going toward that loan. So that's $2,000 less every month that we can spend on other stuff or save. And then What we do today also matters because of the cost of credit, which is interest. And depending on your credit score, you may be charged a higher interest rate. And we'll go through some of that and look at it and see what that looks like with some examples as well. So you definitely want to use credit cards. And I will tell you, I personally use a credit card to pay for everything that I can, and I pay it off every month. And it is a credit card that I get rewards for a particular store that we shop at quite often. And I save that up, and then I use it when we need to buy other stuff, whether that be holiday presents, birthday presents, or literally groceries. Now, the problem comes in if you think, okay, I'm going to do that, but then the month comes and you don't have the money to pay it off. Then you're in quite an issue because you're going to have to pay interest. And then if you only pay the minimum payment, you're going to be paying interest plus paying on that debt for quite a while. So it only works to do that if you know you're going to have it. Well, how do I know I'm going to have it? Because I track the expenses. That way, when the bill comes in at the end of the month, I'm not like, it's $4,000, unless I knew I was really charging $4,000. And then again, I'd want to make sure I've got the income to be able to pay that off every month. So I won't say credit cards are a bad thing because they're not if they're used wisely, but it takes a lot of discipline to use it wisely. But it definitely is a way to build credit, which is going to be important when you go to apply for loans like the home loan or a car loan. And it also helps to protect our purchases, especially online purchases. So many of you all probably use a debit card that is tied to your bank account, and you swipe it and the money comes out of your bank account. I don't even carry a debit card with me. It's actually locked in a safe. I don't carry it in my wallet. I don't use it. Rarely do I ever even activate it, to be honest. Debit cards and credit cards have different types of protections. So if I use my credit card online and I make a purchase and somehow somebody gets my information and they start making purchases with my credit card, I have more consumer protections. So I can, and I do monitor most of my stuff online quite often, but I can even just get the bill and be like, oh, I didn't make that $200 charge or that $300 charge. I can notify the fraud office very quickly with my credit card, whether that's calling them or reporting it online. They're going to shut that card down immediately, meaning it's not going to work anymore. And they're going to freeze those charges and they're going to investigate it. And I'm probably going to have to sign off on a little form certifying those really were not my charges. And while it's going through that process, I don't have to pay for those charges. If you use your debit card and you do the purchase and somebody steals your stuff and they start doing it and you go make another purchase and you're declined, you're like, what do you mean? I had $700 in there. And you see somebody has cleaned out your account. Your like legit money is gone. Now the bank is going to work with you. And it's going to take longer to get it back, and hopefully you do get it back. But maybe then your landlord, the rent's due. The landlord does not care that your account has been wiped out. Your rent is still due. So you do have more protections using a credit card. But again, you want to make sure that you don't go all crazy with the amounts and stuff, and you make sure you truly do have the money to pay it off every month. So avoid carrying the balance so you don't have to pay interest, because interest can really add up. Oh, I think actually I went back instead of forward. There we go. So this is an example of saving versus debt. So if you start saving $100 a month at age 18, in 4 years, you're going to have $4,800 saved up. And this is assuming that you keep it in, I've got a non-interest bank account, but even if you put it into a basic savings account, it's still going to be very low because that interest is not much at all. But it's still saved money, right? Alternatively, if you charge $1,000 on a credit card at age 18, in 4 years, you're still going to owe $652, assuming an 18% interest rate and a $20 monthly payment. So it's about 20% is what that minimum payment's going to be. And if you just make the minimum payment, you're still in 4 years going to owe a lot of money, because a lot of the money you've been paying has been going toward that interest and not toward the actual principal. So a huge difference in, kind of saving versus spending and using the credit card and looking at that from a debt perspective. So let's look at some fun questions. So what is a FICO score? Can anybody tell me what that's used for? So that is the main credit score that lenders look at when they are deciding if they're going to loan you money. So yeah, Jordan, a type of credit score. So are they going to loan you money? Yes or no? And if they do loan you money, how much interest are they going to charge? A credit score is one thing that a lender can discriminate based on, meaning you could have a higher credit score than me. We could get the same loan, same exact amount of money. You got a higher credit score than me, you get a lower interest rate, and I get a higher interest rate. So they can discriminate based on the credit score. You will see other scores out there. They are takes on credit scores. They are not the exact credit score that lenders use. So you may have a credit card that tells you your credit scores went up or down so much based on what you've been doing, stuff like that. That is a take on a credit score. It's not the actual FICO score that the lender uses. It should still be fairly in line with it, but you may see a difference when they actually pull the credit for the real one. So what is the highest score you can have? So I'm seeing 850, seeing 900. So Vincent, you are correct. The highest one is 850. So I've kind of got it broken down. 700 to 850, very good or excellent. 680 to 699, good credit score. 620 to 679, average or okay. But again, lenders can discriminate based on this. So they may say, well, I only am going to loan money to people who have this good credit score or above. I'm not going to give anybody in the 620s and below or so anything, because I'm afraid they may not pay me back. So again, just because you want the loan doesn't necessarily mean you would be approved for a loan. It's going to be based on your credit history. So who can view your credit report? It's much bigger than just loans. So much bigger than lenders. If you rent, you may sign a form that says they're going to pull your credit report. A lender may not rent a home or an apartment to you based on your credit score. They can also discriminate based on that, because they may say, well, you've not been very responsible with your credit. Well, what if you're not responsible with my home or with this apartment? Insurance, car insurance in particular, they may charge you more in automobile insurance based on your credit score. Again, same logic. You're not responsible for your finances. You may not be a very responsible driver. Maybe you're more likely to speed. Maybe you're more likely to get into accidents. And some employers will also check your credit score and decide, do we really want this person working here? Guaranteed, if you're going to work for the IRS, a lot of government jobs, a lot of banking jobs will be checking your credit. Now, can they do it without your permission? Absolutely not. Any of these places, you're going to sign a document giving them permission to check your credit. And anytime your credit is officially checked as a hard check, it will lower your score a little bit. Now, you may be like, well, I get things in the mail quite frequently that says I've been pre-qualified based on my credit for this loan or this credit card. Those are soft checks, if they've even done that. It's basically trying to get you to apply for something that you may or may not qualify for. but that's not hurting your credit. And we'll also talk about checking your own credit report. And anytime you do that, it is not hurting your credit as well. That's a myth that people often think if I check my report, it's going to hurt my score as well. And that doesn't happen. So lots of people can check it. And when you look at the cycle of kind of this credit report, you've got the lenders, service providers, all of that you're doing business with that are reporting to the credit reporting agency how you're paying. Are you paying your bills on time? When did you take out this loan? How much is this loan? Is it a credit card? Does it have a $5,000 limit and you are charged at $4,999? So you're almost at your limit. And then the credit reporting agency takes that information that comes from the lenders, the service providers, and turns that into the FICO score and reports that information, which then creates the score. And then you apply for the new loan. So the lender is going to contact the FICO people and they're going to request your credit report to decide for this new loan what they're going to give you and how much they're going to give you and if they're going to give you and what they're going to charge you for interest. So you really do have a cycle that goes along with that. So again, the lenders, all of those are reporting to begin with. Your payment history goes into your FICO score. And then when you apply for new money, lenders are going to find out your FICO score to decide what they're going to do, or the insurance companies, employers, all of that kind of standpoint when they're requesting that information. So if you have not checked your credit report, that's something you definitely want to do. How many people have checked the report before? Anybody checked it? Seeing some yeses. Yes. Good. So that's something you want to do at least annually. So at least yearly. And this is the free website to go do it. This is the official one. So annualcreditreport.com. It is free, doesn't cost anything, but you will need to have some sort of history to verify it. So do not freak out when you go into it and it starts asking you for different addresses, or if you've ever had a loan on a certain vehicle or a home, and you may be like, oh my gosh, I've never had a loan. Just pick that I've never had a loan button. It's trying to make sure you really are who you say you are, basically. And for some of you, especially with college students, you may have to go the old school route where you have to print out a form and mail it through postal mail, because they are unable to verify you because you've had a few addresses and they can't tie it back correctly. And there's no issue with that. You just mail it in and then they will mail you a copy of it within a couple of weeks generally. So I'm going to talk to you about one of my classes I teach, and it's FYC 3005 Intro to Personal and Family Financial Planning. So coming up in March, the students will be working on part 3 of their financial project for that class. And part of that is checking their credit report. Now, I have been teaching this class for, my goodness, probably 20 years between the University of Florida and I was at the University of Kentucky before that. And I've always done this type of project with it. I have had students find fraud on their credit report. I've had students find medical debt that they did not know. They were in an accident and they thought their parents had paid off the debt, and come to find out they had not, and it was actually on their credit report. So people have been a victim of identity theft. So, some things that you would want to find out before you go find your dream home and you're applying for the loan to buy that, to only find out somebody has stolen your identity. That's not when you want to find that out. And Isabel is asking about that course. I'm going to stick it in the chat and then I'll talk some more about it toward the end as well. So medical debt can be on there for so long. Now, some people are looking at medical debt differently nowadays. And there's been a great debate on whether that should be considered as part of credit or not. And even some things that's on your report will fall off after so many years and stuff like that. like a bankruptcy, for example, is on there for a certain amount of years. But you definitely want to look for fraud, identity theft, issues with that, because it takes a while to get this stuff cleaned back up. Even if it's at no fault of your own, it's going to be a world of headache for you and a long time to clean it up. So there are three credit reporting agencies. And when you go to annualcreditreport.com, you're going to pick which one you get your report from. They should all look very similar. So what I suggest is doing it basically quarterly from one agency, then go to the next one the next time and the next one. So you can actually monitor it throughout the whole year for free. So you can monitor it throughout the whole year for free. If you do find that you are a victim of identity theft or fraud, or maybe even just your wallet has been stolen and it had your credit cards and stuff in there, you can do what's called a credit freeze. And it's basically freezing your credit so nobody can apply for any loans in your name, including yourself. So if you went to apply for something, you would have to unfreeze it to do that. If you need more information about that, I'm happy to point you to some resources for that. And then what's included in that FICO score? So it looks at your payment history. So have you paid your bills on time? Your capacity. So that's what I was getting at. If you have a limit of 5,000, but you've charged like 4,900, your length of your history. So when was your oldest credit established? When was your newest credit established? What types of new credit do you have, and what types of credit do you have in general? So some of you may go shop at the Gap or online, and I guarantee you when you go to check out, it is going to ask you if you want to apply for a Gap card because you're going to get 40% off today. Be very, very careful with that decision. Oftentimes, the Gap cards, stuff like that, are retail specific, meaning it can only be used at like Gap, Old Navy, those stores that they're affiliated with. You couldn't take it to Publix and buy your groceries with it. Those retail specific cards basically ding your credit score harder than if you had a MasterCard that you could use at any store. Now, I will say I have a TJ Maxx MasterCard, but I can use it at any store. I can buy my groceries at Publix with it. That's the one that I do get those rewards back on. Now, they are TJ Maxx specific. I kind of like shopping there. So it works for me. So, really thinking about what you're applying for and a 40% off discount to save, even $40 on a $100 order probably is not worth it, especially if you think you're going to be applying for a new loan anytime soon, because it is going to ding your credit score to get that credit card. So let's see, I see someone asking, is it a good idea to just put a credit freeze on each family member as prevention? I think it really depends on the situation. I wouldn't necessarily advise putting a credit freeze unless you have a reason to be concerned. If your wallet has been stolen, if you've lost a credit card, definitely if you see fraudulent activity on a credit report, all of those are reasons to be concerned. Yeah, I wouldn't advise doing it unless you had a true reason. So I wanted to give an example, and this is based on a 30-year mortgage average, and I've got two we're going to look at. I kept this one from a presentation I did in October of 2020 because those interest rates, if anybody looks at home loans right now, these interest rates are like wonderful, right? They are very, very low. And then I have one that I just pulled for this specific presentation so you could look at the difference and look at how the economy is working too is one interesting aspect, but look at the interest that's paid based on the rates and things too. So this is a 30-year mortgage. So that's the example of 360 monthly payments. And I have this held at a constant of $200,000, which, Gainesville prices for property is pretty expensive. You may not be able to find anything that suits your taste for $200,000. We lived in Gainesville when we first moved here from 2011 to 2017. And then in 2017, we sold our home and actually moved to Ocala, where you could get a much larger home for less money. And the property taxes are way less as well. Now, do I have a commute? I do. It's a lot of interstate. So if you're good with interstate, but we were like 13 miles from the university, and now I am roughly 30 some miles. It took me sometimes longer to get to my house in Gainesville from UF than it did to get to my home in Ocala too. So lots of things to think about when you're looking at buying places. So again, your mortgage, 200,000, and then look at these interest rates. The APR is the annual percentage rate. So if you had that really good credit score, that excellent, you're going to be charged 2.388%. Now, if you had the worst one and they would still give you a loan, which again, when you get down in here, they may not, you're going to be charged close to 4%. So this payment includes principal and interest. The other cost of home ownership is you're going to have your homeowner's insurance that's going to have to be paid. Your property taxes are going to have to be paid. And generally that lender is going to roll that into your payment. So this says $779 has likely increased to probably $1,600 or so easily. And if you did not pay 20% down on this loan, you're going to have what's called private mortgage insurance, which is probably going to increase you another $200 to $300. And that basically, it says it's private mortgage insurance, but what it does is help the lender in case you default, you file bankruptcy. It's not helping you. They're still going to come after you for the money. So it doesn't help you. It just adds more costs. So you really want to try to save for a 20% down payment for a home. So in this case, let's look at the highest one. So $779 for principal and interest. If you had the lowest score, you're going to be paying almost $200 a month more. But look at the interest over the life of the loan that you've paid, $80,000. Now that's in addition to the 200. So it's 280,000 you're paying to borrow 200,000. But look down here, 142,720 in interest. So now you're paying that plus the 200,000. You've paid $342,000 back over the life of the loan. And maybe you're like, well, I'll never live there 30 years. I'm going to resell it. That's great if markets go up and you can get more than you paid for it. But if markets are down, you may actually owe more on it than you can sell for it. And we saw that happen in Gainesville and throughout the United States during the Great Recession that we had. So when I come in 2011, I was on the tail end of that, and property values had basically depleted. So we bought a home that was on 1.5 acres in the Gainesville area for right around $200,000. 3 years before that, when the house was built brand new in 2008, it was $325,000. And we bought it from the bank because the people had lost the home. When we sold it, we were able to sell it for way more than what we paid for it. And then, like I said, I was able to buy a brand new home here in Ocala that was about 1,000 square feet more than the home we had in Gainesville for way less money. And I actually looked at equivalent homes to the one I have in Ocala. Same builder, everything. So look, Ocala to Gainesville, same style home, same square feet, same builder, similar size lot, if not a little smaller in Gainesville, and the homes are selling for $200,000 more. And that was last year I looked at that. So that's also going to come with a lot more in property taxes too. So lots to consider when you think about buying a home. So let's look what that looks like now. February 13th, I pulled these numbers. Same $200,000 mortgage. If you had that really good perfect score, you're going to be paying over 6% for that. The payment has increased almost $500. So $1,206 compared to $779. $80,000 for interest rate compared to $230 $34,000. Now you have paid more in interest than you paid on the house. And this was just pulled literally 3 days ago. I mean, it's crazy. So many people cannot buy a home right now. And if they do, they're having to buy a lot less than what they could have bought just 3 years ago. So we were able to time it really well, but that timing often does not work out. So I would really encourage you, if you're graduating and you're moving, especially if you're moving to a new area, you generally want to rent so you can get a feel for the area and where you might want to live before you buy to begin with. But pay attention, these interest rates are bound to come down eventually. So are the prices of the homes. That's how the economy works. So you got to look and see where that market is. But look down here, even if you could get that loan at 620, and honestly, right now with a traditional mortgage lender, you probably won't get it. But you would be paying $310,000 in interest for a $200,000 house. So yeah, really, really think about it. And I'll tell you, nowadays, people are starting to decide maybe home ownership is not for them. It does come with a lot, with maintenance and all of that kind of stuff. And then, you think too, most of us will not stay in the same area throughout our whole career. So you go to move, well, you've got to sell a home, and you may have to sell it before you can actually afford to buy another one. So it's a lot harder to walk away from something you actually, I say own, but you owe money on it. Yeah, Tina, home ownership means you need a much bigger emergency fund. Yeah, what happens if your air conditioning goes out and it's a home that you own versus you're in an apartment? Yeah, you're looking at probably $8,000 to $20,000 easily, depending on having to replace it and the size of your home and all of that. Easily. A roof. Yeah, something happens to your roof, you need a new one. They're only good so long. Yeah, it's a lot to consider. So another fun question. If you go home and you find that your house has been robbed, y'all got insurance for that, right? So what insurance would you need to have to cover that? Anybody got insurance that's going to help them out if they go home and somebody has stole all their stuff? Yeah. Homeowners or rental. Homeowners or rental. So if y'all are renting here in the Gainesville area, you really need to look at renter's insurance. But first, check with your parents to see if their homeowner's insurance is going to cover you here in Gainesville or not. And if it doesn't, I would really look at it. And you may say, well, I can't afford it. I can't afford to pay for something else. You're probably looking at $10 a month. It is really, really cheap. I have had a student in another semester, her whole apartment, one floor of it burned. There was a fire, the floor burned, it destroyed everything that she owned in the apartment. So I gave the example of somebody robs you, but it also could be, something like that. And that landlord is not going to help you with that kind of stuff. So you got to think, do I have the money to replace all of my stuff? Maybe you do. But if you're like most folks, you probably don't. And again, renter's insurance is relatively cheap. It can also have some protections for you as well. If you've got that dog and that dog bites somebody who comes to visit you, look and see if that's in those policies as well. Some will, some won't. And you want to invest in financial education. So really committing to learning more about managing money, take a course, read a book on materials relative to it. If you've got a significant other, I would encourage you to have a money night for a date night. Talk about values. What are the plans for the future? You could even look at each other's credit report. It'd be really nice to know that they owe $50,000 in student loans before you buy a home with them. And you find out you may not be able to qualify for that. And Isabel's asking if there's any personal finance course that I would recommend. And there is, FYC 3005. Put in the personal plug. I teach this every semester at UF, including the 12-week summer session. So fall, spring, summer, it's either myself or we've got another person who may teach it, but she's taught it for a number of years too. It is an elective for you. I'm working on trying to get it turned into a gen ed requirement, but it is an elective for you. And students consistently come and tell me it is one of the most practical courses they have taken. We will talk about income taxes, home ownership, insurance. So let's say you have to go to the emergency room tonight because you fell down the flight of stairs. Do you know how much your copay is going to be? We should really, know those things. If we're in an accident, what's our deductible? Let's say we're driving on Paynes Prairie, and hopefully this will not happen now, but I was coming in one morning coming across 441 on Paynes Prairie, and somebody had hit an alligator. That car had a lot of damage. If you run over an alligator, how much are you going to owe? Is that covered? Some of you may have comprehensive coverage that you wouldn't have to pay anything for that. Some of you may not. It's kind of like if you hit a deer or something like that. The question is it offered in summer? Yes, during summer C, and then spring and fall semesters. And is it online? It is 100% online. And it is where you don't have to meet. So it's asynchronous. So we don't have like a set meeting time, but you do have set due dates. And it is basically how to adult with your finances, even what to think about when you're looking for a job, your benefits, all of that kind of stuff, the retirement planning. So some stuff that you're probably more interested in right now, but definitely stuff that you need along the way. And I would encourage you, as you all are looking and considering what to do after undergrad, and maybe you want to go for that master's, maybe you eventually want to go for a doctorate degree, something like that, but you're like, well, I need to work some. Look at those employer benefits and see if they have a employee education program, because some will pay for that. Some employers will pay for that. So I worked at the University of Kentucky for 13 years before coming to the University of Florida, and I did my PhD for free through their employee education program. I also did a graduate certificate in applied statistics and a graduate certificate in gerontology, all for free. And I kick myself every day that I don't take classes at UF for free through the employee education. Right now, I still get 6 credits for free. And I did get the bright idea to take some classes during the pandemic when stuff was online. And let's just say I had a lot going on and I had to drop out. So I'm officially a college dropout from that perspective too now. But maybe one day I'll get back to it. But really look at those, because private companies sometimes will offer that, and that tuition is huge. And maybe you want to work at a university, or maybe you want to do it until you can get through a program. And that's wonderful. So Nicole is asking if my course has essays, exams, assignments, or what does it look like? Excuse me. The syllabus is online. You're welcome to look at it just like every syllabus is online. You can take a look at it, but it has weekly chapter assignments. Everything is open book, even the exams. It is not proctored. I'm more interested if you can find the resources you need to make financial decisions, and whether you can memorize and regurgitate stuff. You won't necessarily keep it, but I need you to know terminology, and you're like, oh, okay, I know what a mortgage is. Now I know where to go to look to find interest rates and to make informed decisions. So a lot of it is finding good resources and stuff too. And I'm happy to chat with anybody. I will say in the 12-week, it's a lot more intense because you got 12 weeks versus 16 weeks. So you kind of lose a month. So in closing, make sure you've got a plan, but know it's going to change as your life changes, and life does not go how we plan oftentimes. You're going to have marriages, divorces, kids, maybe movements, different things going on. I can tell you when I was your age, I did not expect to be 47 with a 5-year-old and a 7-year-old. My husband is 57. He says, I'm trying to kill him with young kids. Yeah, foster care. That's one way you get to have kids at our age. Have some form of a spending plan. Use credit wisely. Start saving early, because you have time on your side with that. So that interest just churns on interest and all of that, and time is on your side when you start saving early. Making sure you're protecting your resources, insurance, one way to do that. Make sure you're adequately insured, and make sure you're communicating with your loved ones, with your roommates, your family members, and invest in your financial education. Like I said, FYC 3005 is a great one. It is large course enrollment. I will give you a heads up of that. Usually anywhere from 200 to 250 students. And I'm not saying it to try to like get everybody to enroll. It fills up every semester. I have to turn students down every semester. It always fills, never, but it's like I said, it's one of those courses that can really help you for life and give you lots of practical information. So there's my email. If you have questions, you want to chat about something, you're welcome to reach out to me.